Okay, now coming back to the most important adjustment or जो adjustment हम discuss करने जा रहे हैं, that is there is some contradiction and there is a conflict. Might be I'm wrong, or I might have a very different opinion with respect to the examiner, as examiner has given a different opinion with respect to that one. Let's first of all evaluate what adjustment it is. First of all, read out the adjustment and then we'll try to. Okay, now adjustment is adjustment number three, that on 1st April 20x6, Sebastian Company property had a carrying amount of 11 million but a fair value of 14 million. Okay, at this date, the property had a remaining life of 15 years. Sebastian Company sold the property for $15 million on 30th of September, that is in the mid of the year. Sebastian, that is a subsidiary company, sold the property on 30th September, that is after 6 months during this accounting period. For the year ended 31st March 20x8, Sebastian Company has recorded the historic cost depreciation as well as the gain on disposal related to that property. Okay, we have already made an adjustment in the P&L, that is consolidated P&L. We have already recorded the necessary adjustment in the consolidated P&L. Let me recall you that we have already recognized a depreciation, that is the lower depreciation recorded by the subsidiary company, and we have adjusted. We have recognized the gain on disposal amount, that is the amount that was not recorded or that was over recorded. Let me show you the proof. Let me show you the working for this one. Gain already recorded in P&L of a subsidiary company, that is 5100, but the gain that should actually be recorded, that was 2400. It means there was an excess gain that was recorded by the subsidiary company, and the difference, that was 2700, and we have already adjusted that amount. We have already adjusted that amount in the consolidated P&L. We have already adjusted that amount in the consolidated P&L. Okay, now moving on towards the another requirement, that is a requirement B, that is in which we have to calculate the total assets, and the total assets that should have been recorded in the consolidated P&L. Now what my perception is that if let's see let's say if the company has followed subsidiary company has followed the cost model, so what accounting entry would have been recorded by the subsidiary company, or what accounting entry that subsidiary company has already recorded in their books of accounts? Let's recall. For example, the cash they have received, cash is debited, and no doubt the property, plant and equipment was disposed of, so it was credited, and again there's a gain on disposal, so should have been credited. Gain should have been credited by the subsidiary company. Okay, let's say for example, if the company has followed a cost model, it means company has received $15,000. You can see 15,000 is the proceeds received from a subsidiary company. Cash should be debited by this one. Property, plant and equipment, let's say a net book value will be credited, and the book value at the date of disposal was 9,900. That was the book value. It means the property, plant and equipment have been credited by the subsidiary company by 9,900. Okay, and the gain that was recorded by the subsidiary company is 5,100, and that makes you around 15,000. It means that is the entry is already being recorded in the accounts of a subsidiary company. Please try to understand this one. Okay, now what we believe, that a subsidiary company should have record this asset on a revalued amount, which means the disposal entry should have been like cash should always be debited. Obviously, the proceeds will be debited by 15,000. No doubt, property, plant, and equipment has been discarded or the disposed of. It means this should have been credited, but should have been credited with the amount of 12,600. Am I right? Yes, it should have been credited with the amount of 12,600. As according to the revalued amount, the book value should have been 12,600. Okay, moving on, and a gain of I guess it was 2,400. Yes, a gain of 2,400 should have been recorded by the subsidiary company. Okay, let me recall that highlighted entry is being recorded by the subsidiary company, but what actually should have been done, that is the entry that should be recorded. Now, subsidiary company has disposed of or removed their assets with the amount of 9,900. Please listen to me very carefully. Although the property, plant and equipment should have been disposed of or removed from the balance sheet with the amount of 12,600, It means there's a difference, and the difference amount is that is 2,700, which means the assets of a subsidiary company is overstated. It means the asset, are you listening to my point? It means the asset of a subsidiary company is overstated. The assets that is given in the question, the assets of a subsidiary company that is already given in the question are overstated by 2,700. It means there should be an adjustment made it out. There should be an adjustment in the assets of a subsidiary company, which means the asset should be removed by 2,700. It means assets should be reduced by 2,700. Are you getting my point? Are you getting my point? Assets should have been credited with the amount of 12,600, although the company or the subsidiary company has reduced the asset, although the company has reduced the assets by 9,900, which means 2,700 adjustment need to be done. That needs to be done. That needs to be done with the amount of gain on disposal. That is my opinion. I might be wrong. I might be wrong in this point, but what examiner has suggested, let's read out. Let's read out what examiner has suggested. Examiner suggested that most candidates attempted to adjust the total assets with the fair value depreciation and the disposal. This was not required. This is the examiner suggestion. This was not required as a disposal had taken place during the year and already been accounted for. But my point is why I am raising this point, that no doubt the assets of a subsidiary company that is given in the question. Let's see, this is 110,540. These are the closing assets. I accept this one. But the point is, you have recognized a disposal, or you have removed your non-current asset or the property, plant and equipment with the amount of 9,900. Instead, it should be removed with the amount of 12,600. What my analysis is, what my judgment is, that there should be an adjustment in the assets of a subsidiary company with the amount of 2,700. And not even this one, there should be an adjustment of depreciation of 6 months that should also be recorded, as because the assets, no doubt it's a closing asset, but there should be an adjustment. This asset is overstated, as company has reduced the asset with the amount of only 9,900, and there should be a adjustment, that is the difference of 467 minus 367. It means there should be an adjustment of 100. There should be an adjustment of 100 in the accounts or in the assets of a total asset of a subsidiary company. So my judgment is there should be an adjustment of, no doubt it was a disposal in the mid of the year, but there should be an adjustment, as the closing net assets or the closing total assets are not up to date, as the company has made an entry with the amount of different amounts. So there should be an additional adjustment in this regard. So that is my viewpoint. I might be wrong at this point. My stance could be incorrect, but this is my analysis. This is my viewpoint. Okay, now let's move on towards the next adjustment.